Hello guys, and we will continue on the next topic, which is regarding on the Fibonacci. Okay, so Fibonacci is regarding on the collective of man behavior in investing. Actually, throughout the course, we will learn basically introduction, and I will introduce with you on the origins of Fibonacci, a little bit origins on Fibonacci, and we will go through on how we can use Fibonacci in doing our technical analysis. Okay, Fibonacci has been proven to be really successful, really successful method in helping us doing our technical analysis for a quite number of high accuracy. All right, and before we go further, all right, with the function of Fibonacci, we go through briefly a little bit on the Fibonacci in case this is the first time that you hear about Fibonacci. Actually, it is founded it is a person name, real name is Leonardo Bonacci, and he's also known as Leonardo Fibonacci. It is where the Fibonacci analysis came from, and he was an Italian mathematician in the 12th century. He was considered the most talented Western mathematician of his time and one of the greatest of all time. Alright, that's what history said. And although Fibonacci himself did not come up with what is now known as Fibonacci sequence, alright, he is not the one who come up with the Fibonacci sequence, and he is the one who responsible. He is the one that introduced the phenomenon, the Fibonacci findings to the West through his book, which is Liber Abaci. Okay, and because of this Fibonacci knowledge, it has been helping and has been used in wide area, including engineering, painting, music. It exists in nature, and also we use it in finance to determine our helping us in doing our technical analysis. So what is this Fibonacci functions? Okay, there are two popular functions of Fibonacci in chart reading. Okay, there are two. Number one is it is function as the retracement of seller. As far as we know that there are two lines, which is the demand line and the supply line. So Fibonacci can predict until which retracement, how many percentage of retracement, for example, did an equity reverse when they are doing pullback. Okay, and as a result of this, it is used to check price entry at the lowest. Okay, and this is what we want to do. We want to buy at the very low price, and we use Fibonacci in terms of helping us to predict or to assume at which level did the retracement will occur. And if we see that there is a reversal candle appear, and it coherence with our Fibonacci retracement, that is a very suitable time for us to buy. Okay, we are looking on buying at the retracement. Now remember, most of people saying that we had to buy on the breakout, but actually as to buy at a very low risk, at a very low entry, we have to use Fibonacci to predict so that we can enter at the lowest price as possible for buying. Okay, and besides of us helping us to do retracement assumptions, predictions, so actually Fibonacci helps us in predict our profit target. Okay, now it can help us predict our profit target by the Fibonacci extension. Okay, we use Fibonacci extension to measure our target. Okay, to measure our target, and it has been used as to measure trend and target. Okay, and target. And when you say about target, we mentioned about target is actually it helps us in measure our selling point. Okay, selling point if we want to sell in a short period of time. Okay, want to sell and we are not thinking about holding the stock for a very long time, we can use Fibonacci target to sell our stocks. All right, why is Fibonacci analysis is so popular in trading? Okay, now when we make retracement, in Fibonacci, and this is the same goes to the extensions, we are actually predicting the level of support and resistance of the stocks or any equities. Okay, we are predict the retracement so that we can buy at a very low price, and we predict at the extension that for our profit target, or it can be as our trend measuring. Okay, it doesn't necessarily for us to sell at our Fibonacci target, but if we doing analyze with we doing the analysis on our stocks, if it hit the Fibonacci target, when it retrace, after it retrace, it has high chance to go higher. All right, the price to go higher. And the Fibonacci target is an easy to use, and it is very appealing. It's easy to understand Fibonacci. It's easy to use, and actually it is also yield a very high accuracy. Okay, very high accuracy results that can help us to see the market trend. All right, the market trend. So how to plot Fibonacci levels on the chart? All right, so how to use this Fibonacci in a chart? Okay, we will come to this later and very specific in a practical session, but for now, all right, you have to know that almost all trading platforms provided the technical tools or the interactive chart provide the Fibonacci as a part of their technical tools. Okay, we don't have to worry about this, and all trader has to do is to identify a distinct high and a distinct low. Okay, and later on we will show you on how to use Fibonacci and how to use to identify the distinct high and the distinct low, and we will help you in the plotting Fibonacci correctly. All right, for an upward trending market, it is drawn from the low to the high, and for a downtrend trending market, it is drawn from the high to the low. Okay, we will show you guys how to use Fibonacci correctly later. All right, and we will show you how to use Fibonacci as retracement, and when in a trend, traders naturally want to know how far the financial product is most likely to move in its new direction. Okay, this is we are talking about Fibonacci extension. All right, and Fibonacci retracement levels can help. Certain Fibonacci ratios are useful when you are trying to determine how far for a share price is going to retrace, okay, or move against a previous trends. Again, this is it helps us in determining the retracement level. All right, and this is how we can get into stocks at a very low price. And for this specific for this session, and regarding on advanced Chartist, we are using 61.8% as our super strong power upward. All right, we're using this at least if the stocks are at 61.8% of level of retracement, the consequence rebound would have a strong power level upward. It means that it has high chance to go upward and reach its target. Okay, and if it goes to 50% medium level power for rebound, it means that it has medium level power. Okay, and if it goes to 38.2%, it has a weaker price retrace but still positive upward rebound. All right, if we determine and we see that the trend has power, so it can go higher. Okay, and 0%, that's mean that the supply line or the seller going back to the origin of the demand line. All right, and we can conclude that when it retraced 61.8%, it retraced low, and the seller is less aggressive. All right, and this again, I want to mention to you guys that this Fibonacci retracement significant level is being used specific for this session, for this course, and usually people are looking at the 38.2% as the strong power level upward. Okay, but for our session, we use 61.8% as and above as our strong power level upward, and I will show with you special and specific how to use Fibonacci in terms of our analysis. Okay, in terms of our analysis. And we have to know that 70% of a retracement occur at 61.8% and 38.2%. All right. And for Fibonacci, we have to do it right, and it is very important to get an accurate result. Okay, if we are doing it wrong, if we are wrongly label the distinct high and the distinct low, and when we are doing the projection, we might get an inaccurate result. So doing the things right, as I'm gonna show you later, is very important and crucial. Okay, Fibonacci projection and target. All right, now as far as we know that trends never go straight up or down. Okay, trends move in one direction initially, then they pull back and move in the opposite direction for a while, and then turn around and resume moving in the previous direction. All right, this is a natural ebb and flow of a trend. So what we mean by this is actually the trend move in one direction, consider it's upwards, then it pull back, right, and move in the opposite direction for a while. When they turn around and resume, okay, this we are talking about the natural flow of stock market movement, and we have to know that by this natural flow or natural ebb and flow of a trend, we can predict the subsequent lines of buyer by using Fibonacci projection. Now we use this as our guideline. All right, as our guideline. If Okay, now we see that this is the first line, second line of seller. All right, second line of seller. You can see that is A, right? This B, and this is the retracement C. Now, okay, now if T1 more than T2, all right, T1 more than T2 means like this is T1, the time taken for A to reach B, and T2 is the time taken for B to C. It is same as the number of candle inside, right? And T1 more than T2, if T1 more than T2, all right, and for this projection you have to remember that specific and rarely case for this course we're using this point as 100% distinct high, and this is 0% as distinct low. All right, you have to remember this. Later we will show you, I will show you on how you can make the how you are doing the Fibonacci analysis, and how we use this Fibonacci projection correctly to project our profit target or to project our trend. All right, and now actually when we are doing we are measured trend using the Fibonacci. All right, when we measure trend using the Fibonacci, if we project the profit target and we hit or it's break above the target point, it means that after it retraces, it will continue its movement upward. If it is not hitting if you're not hitting its target point, that's mean it has chance for reversal. All right, you have to remember this. If we have target upsize, if the price hit exactly at the spot, and or it can be break above, so after it retraces it can go higher. So this is what actually means by is how we use Fibonacci as retracement. Okay, for example, like people are using Fibonacci to measure their next target, but sometimes they are using also using the Fibonacci to let the profit run. As long as it hit target ups and after it retraces, it has high chance to go high. All right, if it's not reach its target point, that's mean it has high chance for great reversal. Right, bound, it goes down again. So the accuracy of Fibonacci is really high, and we can say that it is almost highly as 90%, and this has been approved very long time ago. All right, now when Fibo hit or not hit target, okay, now we all right, if Fibo hit target, this is what we call hit, and the scenario B, it hit on the spot, and for the third one, it's not hitting the target point. All right, and why we are showing this, actually we are measuring the downtrend target. All right, and when we use Fibonacci as a trend reversal identification, we can see that at the first line of downtrend, it hit the Fibonacci target downtrend. The price goes below the target point, and then it becomes shorter and just hit at the end of the line, at the end of downtrend. If we measure the Fibonacci and it is not hitting its target, That's mean it has chance for reversal. Right? So if this in a major downtrend, right, this is a major downtrend, and we measure the Fibonacci target should be here. All right, and if we seeing that it is not hitting its target point, it's not hitting its target point, so after it goes up, right, it has high chance for reversal. Right, it has high chance for reversal. You can use this to predict and to buy at a very low price. Okay, now again, if it's not hit its target either up or down, it means it has high chance for reversal. All right, if it hit target, it means it is in a continuation progress. Okay, if retrace, then if you are not in the stocks, that means it is time for you to buy. We use Fibo to measure aggressiveness of buyer and seller of Y component trend to confirm. Okay, to confirm. Use the last two Fibo target to measure uptrend, downtrend, or sideways. And the sideways means that if the price break lower low, if Fibo sideways, it will make higher high. Y price retrace and have power to hit higher high. Okay, we will see this is what we call as speculation pattern, and we will show you guys what this is all mean about, and correlate to previous high and low, support and resistance. Okay, when we use Fibonacci, is usually if we measure a right Fibonacci, it always correlate to previous support and resistance. Okay, this is not new, and if you do it correctly, it will correlate to your support and resistance pretty accurate, right? And now if we measure up, right, and we hit our target, all right, and if we measure down our Fibonacci target and it's also hit our target, that's mean, all right, what I mean by this is that, right, what I mean by this is that if it goes up and it hit the target, and we measure, right, and we measure the target down, it hit target, so that means it will go sideways in the future, right? It will go sideways in the future. And if we measure the target Fibonacci up but it not hit, right, it's not hit, and subsequently when we measure the Fibonacci target down, it hit, that's mean, all right, that's mean is in a downtrend movement. All right, is if we measure the Fibonacci target down, it is not hit. Okay, it is not hit. This is our Fibonacci target down, and it's reverse. And if we subsequently measured Fibonacci target up, it hit. All right, this again not hit, again hit. That's mean this is in the uptrend movement. All right, according to Dow Jones, we know that this is high high and high low, so it will resulted in an uptrend movement. Okay, now if we measure the target up and it is not hit, all right, we measure target up here and it is not hit, right, it is not hit, and subsequently we measured the target down, it is not hit, right, it is not hit, measure target down, it is not hit, again we measure the target up, it's not hit, right, measure target down, is not hit, that's mean the market is in contracting. It is in sideways movement. Okay, but this is maybe in contracting, right? In expanding. It's expanding, this is contracting, and both of this is a sideways movement. Now, when you use Fibonacci as trend measuring, and we want to identify how did the market start to reverse, for example at the bottom reversal, so we can use Fibonacci as our tools to measure either the reversal will happen or not. All right, so every time we measure target and it is easier to hit, and actually it means that the trend is very strong. All right, that's mean when we measure target, all right, downtrend, all right, first 1.618 is actually very far, and usually it does not hit target. All right, and when we measure using a Fibonacci trend and it hit our target, it retraced, and we measure again our target 1.1.0, and subsequently it hit again, and later on we measure again 0.618. Now we can see that our target is getting easier downward, so it means that it is strong. For this case, it is strong downtrend. All right, it is strong downtrend. Same goes to for uptrend. All right, it starts with 1.618 and then it's achieve its target and it becomes 1.0 and subsequently 0.618. Then we can say that it is a strong uptrend. All right, and we can use this as our potential reversal point, where when we measure target, it is for the first time the target is 0.618, then it becomes 1.0, then it becomes 1.618. That means the target is getting far away. Then it means that it's become harder to hit the target. That means it is we know that at that time the trend is become weaker. It's become weaker because the target point is getting further away, and it has low chance for the price to hit the subsequent target. Okay, and then it's it can be an indication that the weak trend is in comments. Okay, it's in comments. Now what I'm saying by this is that you can see that for example, like if you measure target A, B, C, and the target is 1.618 is achieved, all right, and subsequently when you use the technique Fibonacci projection and it becomes 0.618, or usually it goes to 1.0 and it hit its target, then we can say that the trend is very strong uptrend. Okay, this is how we measure trend using Fibonacci. Now vice versa, when we measure the Fibonacci target, first the Fibonacci target is 0.618, then it become harder, sometimes it's not achieve its target, so that's where we can identify the trend is become weaker for uptrend. How about that? You guys getting all the knowledge on Fibonacci? It is pretty quite simple. It's not that hard actually, because what we need to do is to identify distinct high and distinct low pretty accurately. Then it is easier for us to measure the target using Fibonacci. Now again, 70% of stock price rebound to 61.8% and 38.2%. all right, now All right. When you use this, all right, when we see a line A, B, C in a bigger time frame, right? In a bigger time frame, we can see that line A, B, C here, point A, B, C, and we are interested in this part, right? We are interested in this part where we can use the Fibonacci. If the first Fibonacci hit its target, that means after it retraces, it has high chance to go lower, right? It has high chance to go lower. But if we measure, all right, there is a weak trend for downtrend at this particular part, and the Fibonacci target is not hitting its target, it start to reverse, then we know the reversal start to occur, and we know that the retracement is done and the reversal start to go up, all right, and hit its targets up, all right. And we can see that at this particular part, when it's going downward in this correction, all right, can see that it's probability that the target down is getting far, and it's not hitting its target, yeah, in the last line. So we know that the reversal point is secure, yeah, the reversal is secure, and it start to hit its target up, right? And at this time we started to realize that that the trend start to reverse, and it will reverse upwards, okay. All right, so if we measure and we put this point A as a distinct high, and the start of the rally a distinct low, which is 0%, and when we measured this 0 to 100%, and we measured, this is the Fibonacci 61.8%. if this ABC, it is not hitting the, it's not hitting 61.8%, that means it's easy target, but it cannot hit its target down. Thus, actually in a big time frame, we can see that it is not even touched the 61.8% retracement. So when it rebound upwards, and it has high chance to go really upwards, right? Okay, and this is occur usually in a big time frame, right? In a big time frame where we want to see the bigger picture of the stocks. Okay, this is not a small time frame, and actually when you use this, we are able to buy at a very low price and let the profit run as far as you want to go. Okay, thank you.